James, I got a letter from the IRS and I'm freaking out. The good news is that most IRS notices are not audits. In fact, many are routine computer generated letters that can be resolved fairly easily if handled properly. Today, I'm going to walk you through the IRS notices you're most likely to receive and what they mean and exactly how to respond. The CP 2000. This is probably the most common IRS notice I see in my practice. A CP 2000 is generated when the IRS computer believes that income reported to them does not match the income reported on your tax return. The most common causes of this: forgotten 1099 INTs from a bank, missing 1099 divs, brokerage sales not reported properly, retirement distributions that had been omitted, maybe some side hustle income reported on a 1099 NEC, and certainly, as the IRS gets more interested in crypto, any crypto transactions. The notice will show what the IRS thinks was omitted and how much additional tax they believe you owe. So how do you handle it? First, don't automatically pay it. The IRS frequently receives information that lacks important context. For example, I often see stock sales where the IRS knows the selling price but doesn't know the cost basis. The IRS may calculate a $50,000 gain when actually it was only $5,000. So compare the notice against your tax return, brokerage statements, W-2s, and 1099s. If the IRS is correct, sign the response and return it. If they're wrong, respond in writing with supporting documentation, and always keep copies of everything you sent. Next, let's talk about the CP14, which is a balance due notice. This is the IRS basic collection notice. The CP14 says, you owe us money and we haven't received it. This often occurs when there's tax due with the return, estimated payments were insufficient, there was an amended return creating a balance due, or a previous payment wasn't processed properly. So how do you handle this one? Verify the amount owed. Compare it to your filed tax return, canceled checks, IRS transcript, and payment confirmations. If the balance is correct, pay it as quickly as possible because interest continues to accrue daily. If you cannot pay in full, consider an installment agreement. Ignoring a CP14 is what starts the collection process. So how about the CP501? That's the first reminder notice. The CP501 means the IRS previously notified you about a balance due and has not received payment yet. The IRS is essentially saying, you still owe us, please address this. So how do you handle this guy? At this stage, you should verify the balance, confirm previous payments that were credited, and pay the balance or establish a payment plan. The longer you wait, the more interest and penalties will accumulate. How about the CP503? Now we're getting into the second reminder notice. Now the IRS is becoming more serious. A CP503 means prior notices have not been resolved. The IRS is taking immediate action. And how do you handle this one? If you've been ignoring the notices prior, stop. Call the IRS if necessary. Pull your own transcripts. You're allowed to look at your own transcripts. They are your property. Determine whether the balance is correct and get a payment plan in place before the situation escalates. 504. That is the IRS final notice before levy action. This is the notice that gets most people's attention. The CP 504 warns that the IRS may begin collection action. While it's not a wage garnishment yet, it signals that the IRS collection process is advancing. Do not ignore a CP 504. Immediately review the account, confirm the balance, pay the liability, request an installment agreement, or consider professional representation from somebody like myself at this point. At this stage, time does matter. Next comes the CP 24, Refund Applied Notice. This is actually one of the better notices you will receive. The CP 24 generally means that the IRS applied all or part of your refund to another tax liability. For example, you expected a $2,000 tax refund, but the IRS applied it to a balance from a prior year. How do you handle it? Verify that the prior balance existed, review your transcripts, confirm the IRS applied the refund to the correct year, and that's about it. Most CP24 notices are informational. Then there's the CP49, Refund Offset Notice. The CP49 is similar to the CP24. This could involve prior tax liabilities or state tax debts or certain federal debts. Review the notice carefully, make sure the offset was applied correctly, and sometimes taxpayers discover old balances they were unaware of. The CP 3219A is a statutory notice of deficiency. This is one of the more important notices that you'll ever receive. Never, ever ignore the CP 3219A. It's often called the 90-day letter. The IRS is proposing additional tax and giving you the right to challenge this assessment in tax court. So how do you handle this one? Do not put it aside. Read the deadline immediately. Missing the response period can eliminate important appeal rights. If the amount is significant, contact my office or another CPA or a tax attorney right away. My biggest advice: whenever you receive an IRS notice, follow these steps. Step 1, read the notice entirely. Step 2, check the tax year involved. Step 3, compare the notice to your records. Step 4, respond before the deadline. Step 5, keep copies of everything. And one final point: many taxpayers assume that every IRS letter means an audit. In reality, most notices are simply the IRS trying to reconcile information reported by a third party with what appears on your tax return. Stay calm, stay organized, respond promptly. The worst IRS notice is usually not the one you receive, it's the one you ignore. Thanks for watching, and if I can be of any help to you with your tax issues, please be sure to reach out to me at the links below. Thanks, and have a great day.